The other area that I wanted to mention is public policy. We as VCs, we're always super busy working with our portfolio companies, fundraising, doing whatnot, and we always have kind of thought in the past public policy is really for somebody else to deal with. If we want to see some of these markets move from, if you'd like, the bleeding edge to the leading edge, we need to also be willing to invest time in influencing public policy. So the role of the VC there has also changed. I think that we've realized that we need to get much more involved in not just subsidies and market incentives, but also in standards, creating awareness, and ensuring that there is financing for the very early stage. If the governments don't step in and support that valley of death, if you like, there aren't going to be many companies for us to invest in afterwards. We're early, but we're not doing seed stage. If I move on then to the last one about backing the best people, and everybody knows it's, people, people, people. But it's difficult, what do you actually do with that information? What do you actually then, how do you implement that? And I think it has to do with really understanding the profile and creating the network. On the profile side, clean tech, this is not internet dating. Nobody's going to buy a solid oxide fuel cell from a 25-year-old. We need experienced managers. We need guys with gray hair, guys who have spent, 20 years, if you like, within the customer, hopefully within the customer segment, that they have built up relationships, they understand what works, what doesn't work. They can come up with very, very realistic business plans, but then they also have the relationships to implement it. It's different when you've got BP written on your business card, and then tomorrow you go from, with your business card says you're XYZ startup, do you still want to have a meeting with me? And the people say no, unless you've got really strong relationships with these guys. So again, they're selling into behemoth organizations. It's difficult to get in front of those guys. So I think that, really understanding what is the profile of a successful clean tech entrepreneur is really important. And the other thing is about the network, or this pool of candidates. It's different, it's difficult in the clean tech sector, or it's at least different than it is in Silicon Valley IT. Silicon Valley IT, they all know each other. They're very rarely backing an entrepreneur that they've never heard of, right? And that's more of a challenge within clean tech. It's a challenge geographically as well. And I think that, you shouldn't be just giving, if you like, 10 million euros of your investment to somebody you just met over coffee this morning. I mean, it has to be a much longer process. It has to be like a dating process, if you'd like, which means we, as clean tech VCs, need to get out more, and we need to go and meet these people who are potentially today working at the Siemens, the GEs, the ABBs, the Bosches, maybe at some of the large utilities, and we need to kind of know who are our potential candidates well in advance, know these people's strengths and weaknesses, and develop a relationship with them so that when we do find the right match for them, we can reach back into this pool and contact some of those people and hopefully convince them to take over. So in summary, I think that there are some areas which have really affected our view of what our role is and how we spend our time. One is the corporate alliances, and I really cannot stress this enough, how important it is for the VCs to be the ones who actually facilitate these relationships. And we have a substantial number of portfolio companies. We are interesting, if you like, to the corporates because we can talk about a number of companies, and it's much more difficult for some of these startups to actually get in front of the corporates. So we see that as being, if you like, our responsibility. The other issue is, this valley of death and who's financing the valley of death. We really need to get out there, whether it's with the economic development agencies, with public policymakers. We need to ensure that they are really securing the financing of these early stage companies. The other thing, public policy in general, I think on every clean tech VC there has to be somebody, one of the partners, who's involved in that. And the other thing is about this dating, if you like, and getting to know these candidates. And it's really taken, I think, the 10 years that we've been in business to build up these relationships, understanding how the ecosystem works, and where are the interdependencies, and who are the key players that we need to be networking with and building up the relationships as well. So that's it. I hope that some of the ideas kind of were taken up by you, and I know that's a big topic of yesterday and of today as well, and I'm happy to share whatever other information I can with you. It's really important for us that this sector grows and that there's more people, more talent, and more money coming into it as well. Thank you.
Wonderful, Gina. Thank you so much. Oh. Just a quick number running. How many deals did you make in the last 10 years, and how many exits?
We've invested in almost 50 companies in North America and in Europe. Exits, well, we count, companies that have failed also as exits, but I assume you mean successful exits. Yeah. We've probably 15.
15?
Yeah, probably around that, 12, at least a good dozen.
Okay.
Yeah. And so some of them are IPOs, some of them are trade sales, some of them are in process right now.
Wow. So exiting is possible.
Sure. Successfully.
So basically, who has a question for Gina? Because this was my question. And I think you did a great job sharing, really bringing it to the point. I like everything you said very much. I think it's true. Who has a question? Please raise your hand for Gina. Anybody?
Yep, back there. Yep.
Yeah. Shinpei. Onegaishimasu.
And one question about the Valley of Death. At the founding of the company, do you know of any government-backed seed funding scheme that actually is functioning? It seems like a very difficult process, difficult regime to actually organize and prevent abuse while actually fostering venture growth.
There are a lot of different programs existing, and maybe you read Boulevard of Broken Dreams. There's a nice long trail of schemes that didn't work. But I think in Germany, I think the High-Tech Gründerfonds isn't really a government scheme, but it's a collaborative effort by a lot of players. We see a lot of really interesting deals out of that. Quebec has a long history of supporting seed companies. The problem there, there's an issue with these economic development agencies in that a lot of them restrict the funds that they're backing. Oh, first of all, I think government shouldn't make direct investments. I think that's way out of their competence area. But so what they're doing is they're typically starting up seed funds. Because it's government money, they restrict then the fund can only invest in that relevant jurisdiction, right? And the problem is that you don't typically get the best VCs volunteering to manage that kind of money. So what you do is you've got basically a circle. You've got, the only ones who are willing to accept that mandate are people who don't have any other choice. So you don't have a really great internationally connected and successful VC actually picking up those mandates. And so they aren't actually a huge help to the seed companies, which is exactly the stage where a startup needs the most help. And I think also, even if you look at the European community level, when the EIF invests, it restricts the funds that they can only invest in Europe. Right? So they're almost, if you'd like, determining that the VCs backing the European startups will not have strong relationships outside of Europe. So that's a little bit the, I don't have the solution for it, but that's a problem.
All right, here in the corner, yes, Rolf.
Gina, hi there. You were referring to the significantly larger amounts that US startups have available for various reasons. Does this also imply that startups over here are more on the low-tech Me Too side?
No, I don't think so. I think that there's a lot of really innovative companies that don't need huge amounts of money. And I think maybe they're forced in Europe to come up with a bit different business models. You know, if you take Think compared to Tesla, there's no way that Think could have possibly have raised, you know, even probably a tenth of what Tesla raised. So I think that some of the companies simply will not get off the ground. I think the European companies, those who must raise large amounts of money to implement their strategy, will just have a much slower progression, because the management team is always focused on fundraising. Always, and that's a big problem. So you'll have, I think, very innovative technologies coming out of Europe, but you know, the management can actually never focus on meeting their milestones because they're always out on the road trying to chase investors. And the U.S. investors typically won't come won't come into Europe. Maybe the UK, but as soon as you start getting to issues of languages and different laws and stuff, then I think they say, no, this sounds like hard work.
One final one here in the front.
Thank you. My name is Karl, speaking for a company called Sunfire in Germany. Yes. I have a question concerning confidence building. You said it's a long time you need to build up confidence for larger investment. Do you also consider like a very small pitch in a seed phase to just from your side support this confidence building, and not taking a real risk and not taking a real role, but to be involved and to a young company give the chance to have a strong partner already on the side? Is that an option?
I mean, in the end of the day, we're investing other people's money. So about a third of our money comes from corporates, 2/3 comes from, you know, basically your pension funds. So whatever we do because we're trying to make a financial return. So we don't, although it would be nice to just believe that we can invest money just to support people, we can't do that. It has to be that we're there to make money. We do make sometimes very early stage bets. We invested in one company which didn't even have any employees. All they had was a pilot, they said, or a lab scale, I should say, that was working, and it was coming out of the university. And we put a small amount of money in there. But what I would say quite differently is then we took a very strong role. Right, we put a very small amount of money at risk. We took a huge role, first of all, because they had no employees. Second of all, because they needed a whole lot of help, right? We took a very active role until we found them reaching certain milestones. Then we gave them more money, brought in kind of a management team, and now we're kind of handing it over into a more normal relationship, if you like. But yeah, sometimes we do very early stage investments. What's key is you put just a tiny amount of money at risk, you know, maybe $500,000, and then see how far they can get until they've de-risked a bit.
All right, a final round of applause and your speaker gift. Thank you so much, Gina, for coming. Wonderful.